Good morning, traders. Richard Miller doing a quick Ichimoku cloud chart market review of the S&P 500 index. We'll start with the weekly. Clearly, we can see the market's quite extended from the top end of the weekly cloud. Key levels to watch out for Q1 for support is 3684. So there is downside risk to the front end cloud chart support level, as well as this alt breakout high. So there is significant downside consolidation risk. The first level to be tested will be the baseline, turning line, conversion line of the cloud at 3791. And then we should see support being tested at 3687, and by that time the standard line will have caught up with the front end of the cloud. So there's downside risk for a correction in the S&P down to the front end cloud support level based on the weekly cloud chart. Turning to the daily, we can see we still now, the consolidation is now underway. It's testing the turning line or the conversion line of the cloud. If support fails there, we're going to test the front end cloud of 3870, and then the standard line of the cloud, or the baseline of the cloud, a 3821 zone. So that's the other level that we do expect some level of the S&P being tested. So the first level to watch out for is this front end cloud support level, as well as the old high. Will that support hold? Will support come in? If support holds, then that's a nice area to swing trade back into the market for a swing trade. Otherwise, there's downside risk to the front end of the cloud, 3791 in a very weak kind of market. So we do expect some form of a sell-off like this over the next week or two as the market's consolidating this gain. And also we are in February going into March, so we do expect we do expect some form of correction back down to the top end of the cloud. So watch out for these levels, front end cloud level there, as well as the turning line, standard line, and then the bottom end of the cloud. These are key levels to watch out for on the daily. Turning to the 4-hour chart, you can see the consolidation is now well underway. We've lost support at the turning line of the cloud, so the next level is support is the 3871. Front cloud support, standard line support, as well as the alt high. So that's the next level to watch out for. 3872 can be a critical area for a potential rebound. If support fails, then we're going to dip back down into the bottom end of the cloud here and test these alt cloud chart support levels of 3822. That can be the next key area for a potential rebound in the S&P if support fails back down to that level. Turning to the hourly one, you can see the hourly consolidation are well underway. The front end of the cloud signaling that we might still see a little bit of weakness in the market. So if we dip below the cloud, the bottom end of the cloud, the outlook goes from bullish to bearish on the 60-minute chart, since price action below the cloud is overall bearish, and then the downside risk is to these levels 3873, and coincides well with this old high of 3869. So these are the levels to watch out for on the daily, this 60-minute chart. 60-minute charts are vital for the market not to drop below the front end cloud level here. So that's a significant risk. It needs to stay above this level for the outlook to remain bullish. If we dip below these levels, then we're looking at these highs here, 3871, as well as this little step there, 3873 as the next key support level in the S&P. But turning back to the daily, watch out for consolidation risk back down to this old high here, and that coincides well with the front end of the cloud. If support fails there, then the next level is this standard line or the baseline of the cloud, 3821, and then the next level is 3790, or this front cloud support level. Until next time, happy cloud chart trading.